Hello everybody, my name is Nicole and I'm a technical analyst and private investor. And today I've decided to look at precious metals. The reason being that the World Gold Council, which is designed to promote the use and value of gold, has been tweeting proudly, telling us that the amount of money rushing into gold exchange traded funds has seen its highest ever quarterly inflows. And the value behind these funds is now at a record $3.185 trillion. And I'm sort of thinking, yeah, okay. But do you know what? At $1,700, this is certainly not cheap. 1,700 per ounce, that is. It's certainly not cheap. And the consumption of gold jewelry has absolutely collapsed. Unsurprisingly, among this coronavirus pandemic, the last thing you need is a bit of bling. And actually what you want to do is cut down your debts. And that's what everybody's doing with their paychecks that they're receiving from the government, both here and in the United States. The first thing you do is cut back on overheads. In fact, in Thailand, they've been selling so much of their gold jewelry that the Thai government has urged people to stagger their sales, not do it all at once in the second-hand shops, because that's not a wise way to look after the money. Anyway, looking at the weekly chart of the price of spot gold, you'll see that for the last 3 weeks, we've been consolidating in a little triangle, very close to the all-time high, which we hit quite some time ago and in the commodities boom at $1,900 per ounce. So it's expensive, but not the end of the world. There is certain small elements of instability, and I think that's to be expected where so many other financial markets are flying around and nobody's really quite sure what value to put on anything. So while gold is consolidating all right near the highs, I'm not convinced that there is really the kind of push towards this that the Gold Council is promoting. So when you're not sure about something, you look at other similar and related instruments. So my second chart, again, it's a weekly one, and it's the price of spot silver. And you can see that it had a really, really torrid time in March. And then it's well below last summer's highs. In fact, it's trading at almost half of the level it was in August last year. So quite frankly, the idea that investors are, flocking to precious metals because of the global uncertainty and financial market volatility, which is what the World Gold Council is stating, I don't think that's the case here at all, not at all. Yes, silver has bounced from its very low levels earlier this year, but it's stuck here, again in triangle consolidation, at the 50% retracement resistance level. This is certainly not a bullish chart by any means. So, people rushing to precious metals, not true. My third chart is a monthly chart going back a decade, and it's the price of spot platinum. And I think you'll agree with me that this is really a very sorry little specimen. I mean, it's done nothing but lose its value for the last decade. I mean, the chart starts at $1,900 an ounce, and now we're down at 558 was the low in March. I mean, that's just like a quarter of the value where it started. This is not a store for value. This is not a sensible investment at all. Avoid, avoid, avoid. I'll see you next week.